How's it, everyone? We are here with a FinMeUp weekly update covering the most important stock market news during the week, and also a few interesting things happened this week. And at the end, we'll also announce the weekly quiz winners. So if you played the FinMeUp quiz on the FinMeUp app, you might have won. So stay tuned till the end for that. So today we'll be covering quite a few companies. We'll be covering Argent, Sea Limited, Storage, Renergen, Transaction Capital, Purple Group, FTX, Twitter, Disney, and Shoprite. So quite a few to get through, but we'll keep this short and sweet. So let's get into the first one, and that is Transaction Capital. Their revenue grew by 26%. We Buy Cars still performing really strong. Earnings grew by 41%. The SA Taxi core earnings fell by 26%. They also really focus, so I actually listened to their investor call, and they focus a lot on their risk division, which they now call Newton. And that was quite interesting. So put a lot of emphasis there. They're also still very positive about We Buy Cars. Some international expansion on already busy happening, but very gradually. On the other hand, you have quite a few concerns about the second-hand car market, especially if we see what's going on in the US. But according to the management, they are still very confident that they can adapt and also increase, or at least maintain their margins. But this has been a great company over the years. Their earnings grew by their earnings grew by 17%. Their return on average equity decreased from 15.1% to 14%. Their return on average assets remained at 4.4%. So, quite a few numbers there. But what's your take on Transaction Capital? They also declared a final gross dividend of 37 cents per share. So there is a dividend. But Paul, what's your take on Transaction Capital?
Yeah, thank you, Higgo. Yeah, I've been a fan of Transaction Capital for quite some time now. It's a taxi, for me personally, no one likes taxis, but the moment I started investing in Transaction Capital, whenever a taxi like drives in front of me, I'm like, that's okay, man, you go for it. I'm investing in that. So you get to your destination as quickly as possible. But jokes aside, no. So We Buy Cars is carrying this company at the moment, is really doing well. I don't know what these guys are doing behind the scenes, but 41% growth is really looking good. Of course, SA Taxi is the public sector, and We Buy Cars is the private sector. And due to the semiconductor shortage, we had the second-hand car market, at least last year,
And the
did quite
floods.
well.
And the floods that,
Yes, and the floods.
yeah. Yeah, but, I mean, Transaction Capital, there is room for them to definitely grow internationally. I think in South
Yeah,
Africa, there's still room to grow. With We Buy Cars, there's still a lot of room to grow. They have a lot of advantages. So they also outlined that their competitive advantages, like their data points, the first mover advantage,
yeah.
their distribution, the seller, how they do everything, the operations, and they've executed that amazingly. And so there's a lot of room there, but they also outlined that the skills that we have in South Africa and with their risk services with Newton, um,
Yeah.
they highlighted that there's a lot of opportunity internationally for that. So, I mean, the market didn't seem to like it too much, whether it was the results or the investor call. I must say the investor call was very, very well communicated. Like it almost seemed too smooth. So well done for the management for that. But I mean, I think if you own this company for the long term, it is great management. They've got great businesses. They also outlined that the SA taxi business could have, another stagnant year, but
Yeah.
they expect recovery in 2024 onwards. I mean, it's a monopoly. If you think about it, taxis aren't going anywhere, and taxis need to be serviced in various aspects. So, Transaction Capital, I own some shares. I don't know if you do as well.
I
Um,
do a little bit, dip my toes in the water.
yeah. So yeah, let's move on to another, a very exciting play. It has some lovers, it has some haters, and that is Renergen. So we've covered Renergen a few times, interviewed the CEO a few times. He's a very confident CEO in their
Yeah.
operations, and he's also a very clever guy. So there's been a lot of ups and downs for them the past while. As we know, their production, or not production, their commercial deliveries were delayed later than expected. But this week they announced The LNG plant is back in operation and producing LNG after repairs. The commercial delivery to customers will commence later this week, so probably by now. And Renergen is now focused on turning on the helium liquefaction module. So they have a lot of sense announcements. I own Renergen shares, but this is a company that, in 5 years, shareholders are going to be very happy or very disappointed. It's still high risk exploration. It's now not really exploration anymore, now that they're actually producing and delivering. But there's still a lot they need to prove. They still need to raise a lot of funding, but at least now the LNG plant's back on. What are your thoughts?
Yeah, so I think Anthony Clark also wrote an article this week on Renergen where he said investors is now becoming impatient because obviously there was a lot of hype about Renergen, and of course, like you said, Stefano is a very confident CEO. The fact that they have very high concentrated helium in the found helium in the ground, the potential is massive, but can they execute? And there's a roadmap, and there's a plan, and there's a timeline, and they need to stick to that. Otherwise, people are going to lose faith. Of course, Renergen is trading at high valuations, so it is a risky play at this stage. It's hyped up, but for me personally, once again, I also dip my toes in the water with Renergen. I think the opportunity cost is just too big not to at least dip your toes in the water with this one. So I'm keeping a close eye, and like you said, once again, Higgo, this is a long-term play. Don't
Yeah,
expect results tomorrow. So keep it at
yeah.
least for 3 years to 3 to 5 years in your portfolio and hope for the best.
Yeah, well, I'm definitely going to put my grandmother's savings into this, but it's
Yeah.
helium is very important. It's always going to be important, and there is currently a shortage. So if they execute, get it out there, especially if they execute phase two,
Yeah.
raise the funding, execute it, it could be massive. But if they don't, there's so many things that also can go wrong. So this is dependent on your risk tolerance, but it's good to see that there is progress, even though there was a delay. It's back online. Another,
Cool.
you know, favorite amongst many investors, and there's a reason for that, is Purple Group. So Purple Group owns Easy Equities, and as we know, Easy Equities, they disrupted the investing space. Over 1.5 million South Africans registered there, over 700,000 active users. So let's just quickly run through Purple Group's results. Group revenue increased by 33.8%. Group operating expenses also increased by 38%. So there's a big operating expense increase.
Yeah.
The profit before fair value adjustments and tax increased by 55.2%. Just need to double check that. The group basic EPS decreased by 16.8%. The profit attributable to ordinary shareholders decreased by 0.8%. And then also just further announcements that Purple Group acquired the remaining 49% in Easy Crypto for 61 million rand. Easy Equities also acquired the remaining 49 shareholding interest in Easy Properties for 25 million rand. Easy Equities acquired remaining 50% shareholding interest in Rise for 60 million. So they've been busy this year, a lot of acquisitions. The group revenue increased, but the operating expenses also increased a lot. The earnings per share decreased. So here's the thing, currently I don't own any Purple Group shares. Those who've been following me for a while know I was very, very bullish on Purple Group. In 2020 and end of 2019, Purple Group and Tesla were by far my biggest holdings. Purple Group I started buying when it was 34 cents. Bought at 50 cents, 60 cents, 70 cents, 1 rand. And then I started, this is getting really excited now. I sold it at around 2 rand 20, went all the way to 3 rand. But the thing is, it's a great business. They are executing really well. They've executed with everything. They're investing in the stock market, Easy Properties. Easy Crypto is still early, and they've got a few other businesses under Purple Group.
Yeah.
But I think a lot of excitement is priced in. It's come back down heavily. It's now almost around 1 rand 70, 1 rand 60, maybe even more now. But it's a great business. But sometimes the business and the valuations, can you know
Yeah.
go for different
Exactly my
routes.
thoughts.
Yeah.
Yeah.
So
So personally, yeah. Okay, go for it.
yeah. So all I wanted to add, and then I'll give it over to you, is So they've got the international expanding with the Southeast Asia partnership. If you listen to Charles Savage, I listened to his interview on Biz News, and very confident. And I've got a lot of respect for him. I think he's an incredible
Yeah,
executor.
same.
His entire team is incredible executors, and I think they're probably going to execute at this. Um, but what the PE ratio is still quite high. So
Yeah.
if you invest in Purple Group, my take would be, where do you think it's going to be in 5 to 10 years? Because there is still a lot of work that needs to be done. They've shown that they can do it. But these results, fairly mixed. It is tough economic conditions at the moment. There's less consumer spending available, and when there's less savings with high inflation, you've got less money to invest, and if you have less money to invest, it's not good for their platform. But if you look at how they're still adding users, they expanding their product offering. I love the business, and I'll probably add some shares soon in the next 12 months. Just waiting for the right time. But Joe, what's your thoughts?
Yeah, so Purple Group, very interesting company. It's so difficult for me with Purple Group because I know what my head says and what my heart says. So firstly, Purple Group, well done to the Purple Group team. I think it's a brilliant product. It's innovative. It democratized investing. The guy on the street can invest his own money. Simple platform. The transactional shares thing is a beautiful innovation. What happened was easy equities, of course, especially easy equities benefited from COVID, right? So everyone is at home and everyone started investing. They want to try new things. And what happened was the Fed boosted the markets and everyone made a lot of money. So there was a lot of trading going on. There was a lot of profits that was made there. And then now this year in 2022, of course, the markets cooled down a bit. Not only cooled down, but we actually got dumpstered. And so a lot less trading, a lot less profits. And what we're seeing now is just the stock cooling down. Um,
Mm.
in terms of where will it be in 5 years? So that's the big question. For me personally, I, I'm not sure. I'm still on the sidelines for this one because reason being in the SA market, Purple Group has the market share, right? I think it's something like 65%.
I
Can't,
think it's
can't
even
remember,
more.
but
Yeah.
yeah, but they have a lot of the market now. So in SA, they're the go-to. If you want to invest your own money, Purple Group, easy equities, that's the place to be. Internationally, it's a different story. There's a lot of other companies in the space. I think first Africa would be main priority for me personally. I think that's where the biggest opportunity lie. But going
Well,
overseas,
I mean, Southeast Asia, if they execute the partnership, they said the platform has like 10 million users or something, the potential partnership. We don't know who it is yet. But I mean, that's an opportunity for them.
of course, of course. So it's risk versus reward. I think with the share price cooling down now, there's an opportunity for sure. So if you believe in the company, if you believe that they could actually copy paste and make it work overseas, then I think you're
Mm,
going to make a lot of money.
yeah. So another interesting point that Charles highlighted was so their cohort. If you look at, so they launched in 2014, and their 2014, 2015, 2016, all the way up to I think 2019, they're all profitable now. The users that signed up then. 2021 and 2022 still needs to become profitable. Obviously, it's going to take a little bit
Yeah,
longer than the previous cohorts because we're not going to see these incredible returns that we saw. Um, but that's something, they added 500,000 users within, that short period of time compared to all the time in previous history. So, look, let's move on. I mean, we're not going to give an opinion, but love the company. The share price and the company sometimes are different if you look at valuation perspective. And it depends if you look short term or long term.
yeah.
Long term, I'm excited about Purple Group. Short term, we are still in uncertain time with economic conditions. So let's see how they play out, and I really hope that they do well. It's love the company, love the management. So then moving on to a next topic, and that is one you are very passionate about. We all know in the FinMeUp team, Paul is our crypto man, always educates us about blockchain and all of these things. FTX, what happened?
Yo, Higgo, how much time do you have?
No,
Do
not a
you want the
lot.
2 minutes, 5 minutes, 30 minutes? I can speak for 5 hours.
1 minute.
So yeah, let's make it the short of the long. You have SBF, Sam Bankman-Fried. He's the CEO of FTX. FTX is one of the largest exchanges in the world. I think
Was.
maybe six, it was, yeah, not anymore. So what happened was the following. They have this token called FTT, much like Binance has BNB. It's like an in-house token. If you own the token, it has certain utilities, like you get lower trading fees and so on. So in America, you can borrow against your assets, right? New loans. In South Africa, it's not a thing really anymore. If you go to the bank and you want a loan, you can't tell them, listen, here's my collateral, here's my house, here's my car, because we've burned our fingers in South Africa. So it's not really a thing. In South Africa, you borrow, they call it affordability. Like, what is your income? What is your expenses? But in America, you can still borrow against your assets. So you can tell them, here's my shares, here's my house, take it if I can't repay the money. And that's exactly what they did. So they have this FTT token. It was a little bit of a pyramid scheme. There was a lot of like hyping up the token. Then they borrowed real world funds with that collateral, which was not really a thing. Ethereum, Bitcoin, actual real world dollars, and they use those dollars for marketing, buying other companies, basically growing, expanding, etc. But then what happened was the FTT token basically had a hole in it. So they because they borrowed so much money from this collateral, and then you basically bought on their exchange, you bought your Bitcoin, Ethereum, but it was based on money that they bought. So they borrowed, sorry. So they borrowed the Bitcoin. You now go and buy the Bitcoin. So it's not actually you buying the Bitcoin. It's more like an IOU. You borrow from someone. You buy from someone that's borrowed that asset, which is never a good idea. It's okay as long as not everyone wants to withdraw at the same time, because it's not real. It's not really there. And then they experienced what we call a bank run. So there was a little bit of bad press. Long story short, everyone wanted to withdraw at the same time. The fund wasn't available, and boom, FTT crashed. They froze withdrawals, and then there was a hack inside job. Basically, all the remaining funds was basically withdrawn. So if you had money in FTX,
Yeah,
you
you're
don't
not
have
getting
any
it
money
back.
left anymore. You're not getting it back. I'm so sorry. It sucks. It sucks for the
Yeah,
crypto industry as a whole. It's a disaster, basically.
yeah.
And also now when they were audited, there was an $8 billion hole in their balance sheet. So they committed fraud. They lied about their assets. It's not a good look.
So basically, in short, there's going to be a Netflix documentary on it soon.
Definitely. No, definitely. And I mean,
Yeah.
there's weird stuff going on there. All the executives and directors live together in one house, and they're all in a
Yeah.
relationship together. No,
Okay.
it's
Yeah.
you don't want to go there.
PG-18. Um, okay, so FTX bad. Um,
Bad news.
quickly want to touch on 2 points or two companies. The one actually dipped my toes into on Wednesday or Thursday, and that is Argent. It's not a well-known company. It's an industrial company. Usually, I don't invest in industrial companies. I like my tech stuff. Um, but one of my very clever friends, he quite liked them, and as we started talking about it, me as well. But I'll dive into Argent deeper next week. I just bought a little bit to get interest, but they came out, revenue grew 13.5%, EBITDA grew 19.5%, operating profit grew 23.2%, profit for the period grew 24.4%, EPS, earnings per share, grew 28.2%, and there's a dividend, interim gross dividend, this was 6 month results, of 45 cents. If you look at all that, the PE is now around 4. I think it's just below 4.
Yo,
The dividend yield is like above 10. I'll get my facts straight when I do the stock pick on them on the FinMeUp app next week. But looks quite interesting. So in the meantime, check out Argent, Argent. Another company released results, a US listed company, C Limited, earnings per share of negative 0.66, but it beat expectations of negative $1.02. Revenue
yo,
also beat expectations, and we saw the share price go up by a lot. I mean, like 30 or something percent. Um,
yo.
so that's also interesting company in Southeast Asia. And then storage. We'd love to get your take on storage. I don't really follow properties that closely on or listed property. I know some people like it and some people don't, but their property revenue grew by 19%, earnings grew by 16.3%, or distributable earnings, and their EPS grew by 26.6%. They also declared a nice dividend. But what's your take on, the general storage business? It's my take just on it shortly is, I'm not going to pay for storage because I don't have enough stuff yet in order to not keep them in my house. But even in my house, like, in our apartment, there's too many stuff So if I could just put it somewhere in a storage, that'd be great. But in the tough economic conditions, don't you think some people would cut that expense first, like cut their storage, rather bring it in their homes? What's your take on storage?
Yeah, I mean, that's a tough one. It's not my area of expertise, but I think it will make a very interesting article, actually. So give me a few days. I'm going to write a very cool
Okay.
article for the users. So if you want to know more about this, give me a few days. I'll do the research for you, and you can read my 1-2 pager on the app. Let's say next week, Wednesday, Thursday.
Okay, awesome. So if you want to see something on storage, ask it. By the way, if you have any questions, just ask them in the comments and we'll get to that. Or if you want to see any research or something specifically. Another company, Disney. You wanted to say something about Disney? What was that?
Oh yeah, it's just for all the Black Panther Wakanda fans out there. No, like this, eh? Yeah, Wakanda. So third largest domestic opening weekend since the start of the pandemic. So the top three since the start of the pandemic was Spider-Man, of course, everyone's favorite superhero, $260 million. Then Doctor Strange 2. I know this is not a movie review channel, but that was a very average movie for me. But anyway, 187 million. And then Black Panther 2, I haven't seen it, 180 million on the first weekend, so very impressive. I don't know, are you a Marvel fan, Hugo? Do you watch superhero movies?
Some of them. Not a movie expert, but I know a good movie when I see one. But I'm more of a series
Okay.
fan. Give me Peaky
Yeah.
Blinders or Suits. That kind of thing.
Okay.
Yeah. Okay.
Yeah.
So was it a success, Black Panther? Or what's the name of the movie? Wakanda
Yeah,
Forever.
Black Panther 2.
Okay.
I haven't seen the movie, so I don't know. Don't have an opinion on the movie, but the stats don't lie. So
Okay.
they made a lot of money. That's what it comes
Okay.
down to. So
So
yes, it was a
Disney
success for Disney. Yeah.
Disney's happy. Shoprite also posted, another great result.
Yeah, Shoprite.
I
Yeah.
just I just love Shoprite, man. The way they
Yeah.
execute, it's so many, all the innovation. So you've got the 66, is it 66 or 6060? I don't know, but I've used it. It's such a seamless experience. I love shopping at Checkers. The great deals for quality foods and goods. They've got ShopRite X coming live where you just like Amazon Go, you walk in, you take a thing, you walk out, and the payment happens. But if you just look at
Yeah.
everything, the way they execute, wow, like well done to that management. I don't own
Yeah.
ShopRite shares yet. I always think I wanna buy, but it's too expensive, and it just keeps getting more expensive. So unfortunately for
Soul
me,
Financial actually covered ShopRite and then the competitors. He did like a nice competitive analysis between all the different retailers in South Africa and ShopRite. This once again the stats don't lie. They
yeah,
outperform on basically every metric. So super
yeah,
impressive. I don't know who's in charge there, who's doing it, what magic dust you are using on your products or what, but it's really once again
yeah,
very very positive results.
yeah. Um, Okay, so last thing before we do the weekly winners, there's a lot of directors selling shares. So in this week, we've JC companies, we've had an Afrimat director selling a Discovery Santova, one of my favorites,
Ah,
Shoprite, African Rainbow Minerals. So there's a lot of reasons why directors could sell shares. It could be buying a new home. It could be because they don't believe in the share. It could just be because they want some cash. Whatever it is. There's only one reason why they buy shares, and that is if they believe the stock will be worth more, unless they want to lose money. But they have the thing is directors have the best insights of the business.
yeah.
Does it make you a bit scared seeing all these directors selling shares?
Yeah, you go. It's a weird one. The question, of course, is where are we in the market cycle at the moment? Are we closer to the top or closer to the bottom? Well, obviously we're closer to the bottom, hopefully. I don't know how much lower we can go from here. Selling shares now, I don't know. They maybe they know something I don't. Maybe the market is in for some more pain within the next 6 to 12 months. That's of course very possible. Uh,
Just
Generally
on your point,
speaking, selling
that
shares, I don't know. It's not
yeah.
looking good, I guess.
But the JSE hasn't really felt the pain. If you think about it, like we saw US companies, big companies, solid companies fall by, 30, 40, 50%. We
Yeah,
haven't
the
seen that
tech
on the
stocks in
JSE.
US, yo.
Yeah, we haven't
Yeah.
seen that.
So what is your feeling? Are you saying that we might be in for some more pain now?
Well, look, I'm not a short-term trader. Like Santova, I bought more at 7 rand 5 cents. If you look at the PE ratio and how they are executing, they are growing. Recently moved into the US. Some of these companies, yes, we could possibly see short-term volatility. Maybe it goes a bit lower, but when directors sell shares, I don't always get concerned, unless there's a reason to be concerned. But with the companies I own, I'm happy with owning them for now and for the long term. But it's just something
Yeah.
to keep an eye on, something to keep in consideration.
Yeah, personally, like Warren Buffett said or says, always buy dollar cost, and when it's going when it's in tough economic circumstances, you buy even more. So you just increase your debit order, and that's personally what I'm doing at the moment. I think we are much closer to the bottom than to the top. Maybe not the ultimate bottom. Maybe we can go down more like 10%, 15% from here. But will
Yeah,
I make my money in 2 to 3 years from now if I invest now at this current time? I believe so.
yeah. I mean, if it as long as it's in quality companies. I mean, if you dollar costed
Of
average
course.
in Steinhoff when it was 90 rand to 80 rand to 50 rand to 3 rand, so always make sure you follow the companies that you dollar cost average in. Otherwise, just ETFs. ETFs always a great way to the markets. I know you're also a massive
Yeah,
fan of ETFs.
I am.
But yeah, awesome. So if you watch this, hope you enjoyed this. If Tell us in the comments what you think of this. This is the first of its kind weekly wrap of the most important highlights and covering it in a bit more detail. Every day we post the daily highlights on the FinMeUp app. The most important things you need to know. What would have taken you possibly hours now takes you maybe just a few seconds to just stay updated with the market and to also get educational knowledge. Now for the quiz. You could be a weekly winner if you played the quiz on the FinMeUp app. If you haven't, there's 5 questions every single day, and every time you play the quiz, that's an entry to win one of 10 100 Rand cash vouchers. So, yeah, let's see if you won. Here's the results. The 10 winners are